Last day trading example was doing a short. This is doing a long. That's where you buy low and sell high is a long. Um, this is another example of how you get in on opening. Opening. You can see the opening here. There's no triangles. That means it's really low volume. Low volume until you get a triangle here, a black triangle here, and a blue triangle here. So this is basically a heavy. This is a high volume thing. Down here also you'll notice it's gray, and then it turns red, orange, and green, whatever. But point was that this is either a peak or a valley, but you know it's something's happening because all the volume, and as a result you look at boom, 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 it drops. Um, so, but then it comes right back up again with a big bar. So in the opening again, it's very volatile. So you don't want to. Normally you don't get this low trading going on, but when it does happen, it goes fast. So it's why it's very important to base your trades on volume. So here's a bunch of volume happening here. It goes down, and then see all these triangles. But then you can see that this is a valley, right? This big green candle up. I mean, that's a big telltale. It's higher than everything, so you know this is the valley. It's green. It's going up. This was a red, but then it changed directions and it went up. So that's your first valley. So here's your two things. To opening, like last two videos of this video, I say again, for the opening, my strategy is to find the first peak and first valley. You draw your resistance line on the top based on this first peak. You draw the resistance on the bottom based on this valley, and it's a green line in this case. And you put stops there. A buy stop means if it goes above this line, enter. If it goes below this line, you'd enter, but you'd go for a short. Again, if it goes above this line, on top and above, that's an enter for a long. And if it goes below here, it's a enter for a short. In this case, so it went down, came back up, and we don't know if it's going to come back down again. It kind of goes into congestion, and that's the whole key. What's it going to do? So if I claim that you draw your top resistance line a little bit above the top bars here, and the valley a little bit below the valley, and that's your resistance line, right? And so which one's it going to break first? That one or that one? Whichever one it breaks first, that's the one that's going to be the trend for the day. So here it comes up, and it broke this bar, so that means it's going to go up. It goes down a little bit, but notice there's no triangles here, so it's kind of like low volume. That's why there's gray down here. Anyways, it starts heading up for the rest of the, well, not the rest of the day, but a lot of the day. So if you were to put your OCO order in, it's called custom OCO, buy stop or sell stop. You put it one here and one there, and whatever one hits, that's one takes off, and that's the order that's ordered, and the other one's canceled. So we ordered the buy, and we've exited we've canceled this one. So the next thing we have to do is put in a security, what we used to call stop loss, or just stop. If it for some reason we're wrong and it heads back down, what do we do? The stop loss, and I'm still trying to figure out the best way to do this. Do we put the stop loss right here? Like if it hits this and changes direction, comes down. If you do that, you can always you'll get out, but you'll have a bigger loss than if you have something less than that. So I'm kind of looking at two things. What's the difference between this price and this price? Go right in the middle. And also, if you look at these candles here, how long, here's the first peak. How big are those candles? So you want to maybe put it below the lowest one. So that's the lowest one here. A little bit below. And the thing to notice is this one right there, right? See this bar, how far it came down? If we came across, you notice it ends right there at this, sets up a yeah, notice it hits that peak, it hits lower that. Okay, so that candle hits the top of that candle with the blue triangle, high volume, comes down here, hits the bottom of that one. So you can tell that this is sort of a resistance line, and it came down. Sure enough, it hit those. So I think you should keep taking those count. Look at the peak, the lowest candle, and you can look at the last blue candle, these last couple blue candles. You know, you got in here. What was the blue candle right there? So you can tell that right over here might be pushing it to put the stop loss or sell stop, or down here, or you can even go down here. If you took the worst case right there, 1509 to 1524, 15 cents. Okay, so you would have taken about a 1% loss. So the enter point is about you're kind of risking about a 1% loss. That's what we saw the last example too. Anyways, if you can make it past go your enter thing, if that's a little bit too risky for you, you might want to wait until you get the third peak, right? The third peak is right there. One peak, two peak, third peak. And see it goes up. It's high volume, boom, and it comes back down. That's the valley. So first peak, first valley, second peak, sorry, the second peak, second valley. Anyways, that might be more of a safer bet. Sometimes though it starts heading back up. It's up to you. If by the time you get to here, you see this thing, it's a lot much safer bet, and you may have got back in here, and that level right there is about the same level as that, so it would have been a lot less risky. But every time you get in, there's a risk that it's going to go down. If we'd have got in here, you still would have had it. You still could have come boom down. So the first entry point's the most risky. So what I want to talk to you now is about moving the sell stop up as we go. So the first sell stop, we said, is somewhere between here and here, and you put it in there, and if it hopefully it looks like that was the best one, about a 1%, and if it breaks that 1%, you've taken a 1% loss. Okay, so anyways, that's the risk. And so here's your stop right there. And now what we're going to talk about is it goes down here, and then it comes back up and comes back down, right? And so once you've reached the peak, you can look back at the peak and say, what's the valley? And so the valley, I guess, would be this bottom part right here. And so you can move your stop, your sell stop from here to there, right? But you really might not know. Let me move this over. You'll make your decision somewhere around there. You know, you see the peak and it comes back down, so you know that the peak's about right there. So right that time there, you say, okay, this is the peak, and that's the valley. So you can move your stop from here to there. It comes back down and reaches a valley, but at this point you don't know it's a valley. All of a sudden it shoots up, and you see this red triangle, the blue triangle. That's high volume. This big thing here, you know it's on the way up. And so this is like coming up towards the peak. And these little things here, right? See them? There's normally one or two blue triangles to get to the peak, and then it drops. That's generally the case. So that's why I circled these in red, a little red circle, to say this is kind of like your highlight. And then you see it, here it comes down, and so you know that's sort of the peak. And then this is sort of the valley, so you can move your sell stop from here to there, right? Then it goes back up again, and you got up three black ones and a blue, and it's heading back down. So honestly, you could say, hey, duplicate. You could recognize that as a peak right there, or that as a peak. So right about there, you know that's the valley. So you can move your sell stop. Again, you go to like the low. So this is one low, one valley. So you go to the previous valley, and move it, and that's your level. But you don't make the decision until you see the second valley. So you see this valley, and then you make your decision to move your sell stop up to what the previous valley is, right? Then it goes back up, and here's your peak symbol, and it starts heading back down, and it's come back up. So now, since this is going up, you know that this is the next valley. So you move it up. Oh, I did already. Sorry. Activate. Yeah. So this is the valley. Comes down. Here's another valley, and you know it when it starts heading back up. So right about here, you move the sell stop from here to there. Then it goes up. You see the red bubble. That means you're getting close to the peak, and there's the peak, and now it's heading back down. So this is probably the valley, and it heads back. Start heading back up. So now you can move your right. So that's the valley, but you don't set the sell stop up until it starts back up again. Right there, it's starting back up. So that's your new sell stop, and you keep on riding it up this way. I'm not going to keep on going through every step, but you see what happens. It reaches these big violet lines are like that I had made before the day, showing like major resistance lines, and it keeps on going up till it hits that line. Then it comes back down, it hits that line again, comes back down, hits that line again. So you know that that's a major resistance line, and this is going into what they call congestion. Instead of going up, it's going sideways, which they call congestion. So this would be a good time to get out somewhere in here, which is like $16. So if you got in over down here at 15.25, you made 35 cents, which is a 2% gain. So you made 2% gain. And it's like 9 o'clock in the morning, so you've been at it for 2.5 hours. And you still have the rest of the day to make some more trades if you want, but that's the big trade. So that's this video. This is a long trade.